All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks. And in this video, I want to walk you through how we utilize the ETFs in different ways on a weekly basis. In our previous couple of videos, we talked about why we feel everybody should have ETFs on their watch list. We also walked you through what names make it to our watch list. How do you structure the list of products that you're looking at? I want to walk you through how we stay very active on a weekly basis. One of the concerns that I hear from traders oftentimes when we start to talk about these markets is they're concerned with the potential for a long holding time. They don't want to hold for weeks or months on end, which is the perception of ETFs. In reality, you can stay very, very active with these markets. As we talked about in the previous videos, they allow us to get instant diversification. They're very, very liquid. And as you'll see here today, we can take trades where we're in and out in just a couple of days. We're going to talk about our weekly scalpers here over the next few minutes. If you've not had a chance to go back and watch our previous video, highly recommend that you do so because we do share a link in that video where you can download our ETF watch list. We break it down and we highlight the exact markets that we track each and every week. And you'll notice through this list, we've got different sector ETFs, you have different index ETFs, you have ETFs that track commodities, gold and silver, the bond market. You can get instant diversification in so many different types of market conditions. You really want to have access to these markets going forward. Now, and I should point out again, this is not meant to take the place of individual stocks. We still want to trade Tesla, Apple, Microsoft. We love those markets. But adding in the ETFs is going to give you better flexibility going forward, regardless of whether we're in a bearish market, bullish market, a neutral, choppy market. It's a great way to get that diversification. So let's jump in and let's start out with symbol TLT. This is the bond ETF. We know at the moment the bond market is very much in focus. We have a lot of news with the Fed, with interest rates, fighting inflation. You've got the bond market active, and I don't see that changing here going forward. I'd like to have some exposure there. When we take a look at TLT and you start to talk about bonds, oftentimes you immediately go to that long hold, right? You're talking about potentially months or years. Not the case. With our weekly scalpers trade, we're using the hourly chart. These trades are designed to get us in and out in just a few days. Allows us to turn over our capital, allows us to stay very, very active without having to hold for weeks on end. Here on TLT, we're utilizing our reversal wave trader program. That's the program that gives us the exact entry, the target, the stop levels. Those are the blue dots on my chart. So now the entire setup is outlined for me before I ever put the trade on. The design of this video is not to walk you through the nuts and bolts of that setup. You can use any system that you want. Bottom line is you want to have a system in place before you ever start taking trades live. You want to have a plan of attack before you ever initiate a position. Well, here on these blue dots, the system is telling me to put on a bullish trade. There's multiple ways I can do that, and that's the benefit of trading options. But what we did, and what we do with our weekly scalpers in many cases, is just we come in and buy very short-term long call and long put options. In this case, we came in and we bought the 90 calls right here at our entry point. And in 2 days, we're already hitting our target. We bought the 90 calls for just over $100, $108 per contract to be exact. It gave us one way of making money. We needed the stock to move to the upside. Unfortunately, it did. And it allowed us to close out of the position. We booked a $106 profit. That's a 98% return. That's $424 of profit if you're risking $500 per trade. Why did I select $500? Because we know that that's the number that fits a lot of retail traders. So in and out in 2 days. We're not concerned with what the Fed's going to do months from now in their fight on inflation. We don't care what rates are going to do down the road. We're just concerned with what's going to happen over the next few days. And it allowed us to book a really great return. And as we talked about in the earlier videos, I love the ETFs because they don't tend to be as volatile. Notice this move to the upside. It is pretty steady. You didn't get the big back and forth whipsaw that you can see on some of the individual stocks. It's just a smoother overall trade. Big reason why I love trading these markets. Now let's go over to silver. This is the silver ETF. I love the metals going forward. I think both gold and silver are going to be great trading vehicles here in the months to come. SLV, again, I don't care if the market moves up or down, does not matter to me. We know that the market is going to move in both directions over time. You want to have the ability to play the market both higher and lower. TLT, we played a great move to the upside, in and out, 2 days, booking close to a 100% return. Now here on SLV, notice how my entry dot, it's this yellow dot, that gave me an entry point on the downside. Now I'm looking for a near-term move lower. I'm not going to be concerned with what's going to happen 3-4 months from now or even 3-4 weeks from now. I'm concerned with what's going to happen over the next few days. And in this case, the system had me leaning to the bearish side. We came in and we bought the 23 puts. Benefit, we're in for less than $100 per contract. We paid $76 per contract to put this position on. If you go back to TLT, we're talking about just over $100 per contract. The ETFs, it's a great cost savings for a lot of retail traders. In many cases, you're going to be able to put these positions on for a couple $100 per contract or less. A far lower cost when compared to trading some of the expensive tech stocks, right? Here on the downside, we were in and out in 3 days. 3 days later, we came in, we closed out of the position, we booked a $48 profit per contract. That's a 63% return on our capital in 3 days. We're not tying up capital for weeks or months at a time. We're in and out in a couple of days. Again, 63% return, that's huge. That adds up in a big way. That's $288 a profit if you're risking $500 per trade. So here we're looking at two very different markets, two ETFs that give us instant diversification, very different than the tech stocks. We're tying up far less capital compared to those tech stocks. And now we're able to react to anything the market throws our way. This is why you don't want to ignore the ETFs. This is why you want to have these markets on your watch list going forward. So these are our weekly scalper trades. And best part about what I showed you here today, these trades are trades that we're sending out to our members each and every week. We send these out when we open trades. We send the alerts out when we close trades. That way you always know where we stand on every position that we take. And we're actually going to be providing more information on this exact system next week. So make sure you pay attention to our YouTube channel. We'll provide more details next week. We're super excited. We have not released this system now for months, and we're thrilled to be able to release it to you all. So if you have any questions on the setups here today, if you have any trouble downloading our ETF watch list that we shared here a few days ago, let us know. We're more than willing to help out. My direct email is mike@netpicks.com, or you can just simply reply and post a comment on the YouTube video. All right, so I'm going to wrap this video up here. I'll be back with you guys over the next few days, and we'll continue to share why we love to trade the ETFs.